Hey guys, Mike here. So we had another roller coaster day in the market, where it's basically 0.5% moves, moving up, oh, we're going to the moon, and then boom, sell it off at the end of the day. So basically ended up relatively flat on the S&P, as you can see, but we did have some red folder news, which obviously caused a nice spike up this morning at 8:30, and unemployment claims came in less than expected. So that was a good thing. We'll go over the flash services PMI and manufacturing chart in just a second. And I'll tell you what, you think our stock market has had a good rally back up? Wait till I show you some other stock markets. I mean, we are definitely behind them, to say the least, that is for sure. But there's one difference between us and a lot of those stock markets. We'll also go into not just the S&P, the Qs. We talked about those levels yesterday, right? So I was saying, be careful thinking it's just going to go down because we didn't break a certain level. Don't be surprised if we come back up, which is what we did. But we'll also pull up one of the charts, very important to watch here, and what's really moving this market right now. And then we'll talk about a few stocks like Tesla and stuff that obviously setting up for some big moves coming up maybe. But when you look at flash services PMI and why I'm thinking about it, put your questions in the comments for Saturday's video. And also if you want me to put them in the future Saturday videos, I'm going to be going on vacation next week, just FYI, in the middle of the week. So I can try to do what I did last year, which you guys seem to like, which is put together pre-recorded videos for data from members' videos, stuff you can use the rest of your life. That went over pretty well last year. So I'm trying to put that together for you guys as well. But just put your questions down the bottom. It can be pretty much anything, and I'll try to get to them for you. But anyway, talking about flash services, PMI, manufacturing is kind of just stuck in this range. So again, this one's not contraction. It's just sitting right above 50 right there. Keeps dipping below for the manufacturing, then basically coming back above. So again, better than expected. Okay, so again, unemployment claims. We all know the job that is delayed, but this right here is holding up for now. So that's something good to speak about. Now, when you look at the global peers, when it comes to the S&P 500, there is a huge gap, as you can see right here. And so they have definitely been handily outperforming us without a doubt. And when you just pull up a few of these, you can see any kind of ETF coming out of Europe right now, especially if it's tech or anything else, well past all-time highs on them. The DAX, well past all-time highs. I mean, and you can see the way it's moved back up is identical to our stock market, right? This right here is the Stocks Europe 600. That's right at all-time highs. You look at the UK right here, it's about, I think it's 0.5%. It might actually pass it today, but 0.5% away from all-time highs right there. And the reason why these stock markets are ahead of ours, to me, is one simple thing. What are all of those countries doing? There's many more. I mean, there's a whole laundry list of them you can pull up, and they're cutting rates. They're cutting interest rates. Some of them are even doing stimulus and stuff. So, that's the big difference. Markets, not just this market lives on liquidity. Like, all the markets react good to it, because you can't tell me their economies are any better off than we are. I mean, come on, that's not even the case. But that's what you're seeing. So again, the stock market loves liquidity more than it does anything else. So we aren't cutting rates right now, and our yields are going through the roof and all that fun stuff. So that's what it is. Now, looking at what's moving this market, like today, you'll see a lot of tech. You got some flyers out there like airlines, transportation, but for the most part, the reason why the S&P is so much weaker than the NASDAQ is because most of their sectors were red today and have been red multiple days, and it's because tech. And this is what we talked about yesterday when we talked about this level, saying, look, that level broke on the S&P, on the SPY, you can see, but it did not break on the QQQs. Don't be surprised if we get a pop back up after coming into that 4-hour fair value gap, and that's what happened. Right, we got the pop back up, as you can see. And, when you look to the left right there, every time it's come down into this fair value gap, even touched down into it, it gets a pop back up. Now, there is a fair value gap above, which is where we got rejected at when we came up into it today. So we're going to see if it wants to eat more liquidity up to the upside tomorrow. Because remember, we got a 3-day weekend coming up. That can happen. But what I really want to look for is if we come down into this 4-hour fair value gap, as you can see, every time we come down, we dip a little more into it and we get those bounces. If we come down into it tomorrow, do we get that bounce again? Again, when you cut through large fair value gaps, and this is the 1-hour part, but it's actually a 4-hour fair value gap. I mean, look at this, as you can see right there. That's where you get those bounces. It should be a slow grind. If you see it cut through something like that, then we are definitely heading down lower. There's no ifs, ands, or buts about that. That's usually how that works. And so just watch out for that like that. We need to get beneath that, and we need to close below that. All right, so don't be surprised if we maybe grab some liquidity up tomorrow and then try to move back down. Again, it's a 3-day weekend, holiday weekend. You got Memorial Day on Monday. And so we'll see if everybody's going to want to hold or not. And sometimes on those 3-day weekends, you'll see a pump on it to go green and then sell off at the end of the day. Again, there's the fair value gaps up above. So there is liquidity above us. But when you look at this, again, here's the SPX. I mean, 5% from all-time highs when you look at that, right? But when we pull up the Qs, not quite as much, right around, I believe it's 5%, so a little less to get the all-time highs on that one. But when you go over to the equal weight ETFs, this what lets us know. This what lets us know it's not just the Mag 7. It's a lot of tech. See, it's less, 4.75. So we got less to go on the equal weight ETF to get the all-time highs than the Qs do, than the S&P does. And you've seen these stocks. And by the way, that trend line still holds well. And that goes back to 2023. And so far it was support, continues to be resist. Now it's resistance. So see if we can break above that or not. But again, you know, and you look at this one, we kind of look at this on a 4-hour chart, it's already closed that 4-hour fair value gap. And that's where it's sitting right now. So since we know it's not just the Mag 7, there's a whole lot of semiconductors, a whole lot of tech stocks. You've seen them pushing this thing up. Let's see what happens. Because again, I'm not, if we get a pullback, that's great, you know, but I'm not sitting here going, oh, we got to have a pullback. I'm just saying, I think everybody would agree we're overextended and everything. But if we do, that just makes sense. That's the perfect level to be watching, not just on the Qs, but the QQEW is something to watch too, right? The 200 lines up right there with it. And again, it's not just the Mag 7 leading this whole charge back up. It was at the beginning, and now all these other tech stocks have started to catch back up, especially the semiconductors. Now, there are people hedging. I mean, massive, especially for June 20th, millions and millions of dollars worth of puts coming in. Again, you don't know if it's a hedge or not. It seems people are playing for a hedge for sure because it is big money doing that just in case. So, you know, don't be surprised. Now, Tesla's a different story. Again, still in this range. You know, we marked this box out that we thought we were dipping below it. But again, it closed right there, and as it's coming down that daily fair value gap, it just keeps bouncing off of it. And so it's just setting up, just waiting for this big move. It's what Tesla does. Whenever it consolidates, you're going to get this big move coming up. And somebody let me know, I need to look this up real quick. I didn't see Elon talk about this, but does anybody know the exact date of the robo-taxi launch? I did see where they're literally launching like 15 cars or something. I mean, it's really nothing. And we'll talk about that in just a minute. But again, you can see, I mean, it's going to be a huge move, whichever way it decides to go, because usually it is a sell the news event. The question is, you get the pop above, because it loves to run up into the event and then sell down after the event. So, you know, that's what we're kind of looking for. And a lot of people are thinking, don't think we're going back down to 305, 310 anymore. Not unless something happens. It might just go ahead and just break above and go right now. I just need to know the exact date. Now, HIMS, very important here. You can see it filled that gap to the penny. Nice 11% bounce right there. This level is key that it closed at. It didn't close above, but it closed at, because you can clearly see that level right there around between 50, 53 bucks was resistance, turned to support multiple times right here. So let's see if we end up getting a nice bounce up for HIMS tomorrow, or it wants to come down more. If it breaks that level, yeah, there's no doubt. You can see right there it was resistance back then as well. So if it breaks that level, that is definitely a key level. So if it comes down past that gap, then you're looking around like 48.88, and then from there around 46.20, and there is a fair value gap if it continues to come down. But this one, I think a lot of people are playing for this bounce if this level holds. I think this level is definitely key, especially that gap got filled. And this is a high flyer, right? I mean, let's be real about it. And you can see also, if we pull the fibs up in this thing to come down, I guess if you want to say that daily fair value gap right there would be a swing low, you know, then you're talking about it came down to 50% retracement and also got the bounce right there, which also aligned with that gap. Again, this is a high flyer. So let me know. I think it was down big today because I think one of their competitors decided to list their weight loss drugs for like cheap as can be. And so usually any company comes out with any kind of weight loss drug information, it usually hits him pretty hard. So I think that was for the big, because it was like down like 10 to 12%, I believe, sitting there in pre-market. So that's what was going on with HIMS today. And Google, you know, another one. Look at this volume on Google when I pull it up. You can see on the daily, but on the hourly especially, again, right at open, calls start rolling in, another big pop up, end up retesting the 170.87 level, got all the way to 175. So, you know, another big move up forward, continues on the daily. You can see that. That is higher and lows, higher and lows, higher and lows, right? Don't like those big wicks on top, but it is what it is. So again, you see that right there at open. So that seems to be the game plan with this one. In pre-market at open, at least, start driving this thing up. So, you know, it actually ended at 170, what was that, 75 or whatever it is. So if we do want to come down, see if it does fill that gap tomorrow. You know, in pre-market though, make sure you pull up pre-market, because that's when it's probably most likely going to happen, if it's going to happen. Okay, but if not, then, you know, you can see this thing go up to like 180, 182 right there. And we'll come out to the daily, you can kind of see what I'm talking about. But again, right there, yeah, 180, 199, 182, somewhere in there. So just kind of keep that in mind if Google wants to keep going. Again, even with this move right now, it's still kind of a lagger because you see how many others have taken a break right now. NVIDIA's taking a break, Tesla's taking a break, Apple's taking a break, and all of a sudden, even Microsoft took a break, and all of a sudden, here comes Google pushing up. So watch that volume bar in the morning right there, and that 182 will put it right there at that golden pocket area, which a lot of them have already reached. Now, looking at SOFI, watch this one. It looks like it's bull flagging to me, and it's coming down into that area right there where it got a 17% bounce. And so I don't know if it's going to get down in that area or not. It's touching it right now. But if it breaks that trend line, yeah, it's not even to the 200, then you're definitely going to move back up. Again, a lot of this will have to do with what's the market going to do. Okay, that's very simple. Now, when it comes to data, new home sales is the only thing you got to worry about. There is no earnings to worry about at all. Again, tomorrow, once the market closes, we'll start a 3-day weekend, Saturday, Sunday, Monday close, back open on Tuesday, so be ready for that. Again, put your questions in the bottom for Saturday's video. Really appreciate that, guys. Please hit that like, subscribe button. Think about sharing the video. Think about signing up for the membership. Less than a McDonald's combo. They go for about $10 in my area. I've kept this at $7.99 for a reason for you guys. So that's what you get with it. And I'll end up seeing you guys Saturday.